Hi all, welcome to one more session on AML CFT. Lot of points we are discussing since morning, a lot of WhatsApp, a lot of emails, a lot of calls, which we may have received on the subject. So I thought, let me summarize some of the critical points. See, I can say whatever is happening on collection of data from our regulatory authorities is happening to ensure that they also conduct a risk-based approach from a clientele perspective. Now let's straight away jump to the questions which are getting asked for. I'm not going to touch across the questions which are predominantly, you can say, regular in nature, where you are just providing the information or you have to collate the data from a financial perspective and provide it. But let's look at some of the critical aspects which are very important. I'll start with the session saying that the more important points, or you can say the crux of discussion, is happening on three main parameters. Point number one, do we have a right procedures in our hand to ensure that AML CFT compliance is being taken care of? That's first point. Second, are we conducting regular trainings for our team, for our staff, for the people who are around us, and making sure that everyone is known and really comply to what is expected to be done for? And the third part is, are we doing a screening for our clients? That means one is CDD and looking at from a sanctions perspective also, that these people are not having any watch list alerts or any kind of alert which warrants us either not to do a business with them, and if we are not doing a business and we found those alerts, how are we reporting those as a suspicious activity or a transaction, or if you found something incorrect on those profiles. So these are three broad factors. Yes, there are so many other points, but let's look at and jump on the broader aspects which are being looked at. I'm not touching across, as I said, all the questions, but definitely some of the questions which are critical. Now, the first point is coming: did your establishment accept any virtual currency payment in the reporting period? So now, virtual currency does not mean only a direct virtual currency. It can be from an agent or intermediary who is supporting you to complete that transaction. So just make sure if you are accepting, then this is the question which is an alert, technically speaking, and reporting has to be done adequately. There is no second thought of how the reporting should be done. Next point comes: does your establishment use a non-staff third party, agent, representative, or introducer, or others to deal the product or services? Like a lot of time we have heard that we have an introducer who comes up for buy of precious metals or precious stone, and then we sell the product because we don't know the end user or end consumer, but definitely we know the agent or a representative, so that comes into play. So if that is the case, you have to be very sure in how you answer and how the mitigating controls are being placed by you. So it's not only about an answer. Yes, answer, you have to do what is right, but you have to also look at, are you doing a screening for the agents, representative, or introducer who are part of it? Now here, the third parties are technically becoming a part of an agent or your representatives. So you have to look at their CDD also, and what is a third party role provided. So this is a descriptive question which you have to give an answer, that what are the role or what are the action plans these parties are doing. Are they only introducing you and then you take care of everything, or are they taking care of the complete transaction? So whatever you do from your organization perspective, that has to be very clearly articulated. Next point, again, I have picked up some of the points. So you can see 44, 45, 67, and 68. These are all related to one of the aspects, that is, do you have established and prepared a document set of AML CFT policy and procedures? So now they're not talking about a policy and procedure which is known to one person or another. They're talking very clearly written policy and procedure. So that has to be there. Next point, 45 covers, it has to be approved by the board or the senior management. So depending on the size of the organization, the senior management or the senior authority in the organization should approve those policies and procedure and how it is done. Do you have a documented red flag? So let's say example, you're working in an organization where you have created, because of an organization type or the product you deal, there are some red flag alert which are being defined in the policy document, stating that, let's say example, if someone comes and does not provide us the full information of UBO, that's a red flag. But had you documented those pointers, that becomes very important. And this is what is covered in point number 67 and 68. Again, we are going back to the policies and procedures, whether the red flag alerts or red flag grounds are being adequately documented. That's becoming a point in this question. I have just shown you a broad glimpse of how the policy and procedure looks alike. Uh, Definitely, you need to cover what is the purpose, what is the company background for which you are making, because policy procedure is not a standard document which can be adopted by anyone. It has to be very specific for the organization. You need to define the governance roles and responsibilities. Who are what roles they're adopting? Do you have a senior management? What are the people who are the senior management? Who is a compliance officer? If there is an audit, which is a mandatory requirement, who are the auditors? If it is defined, yes. If not, then you have to say that what is the process you will use to appoint those auditors. And then you have to give some background about what is money laundering, because the staff, this becomes a kind of a ready reckoner for the staff also, so that they understand what need to be done and what's not supposed to be done. What are the statutory provisions which are defined in various regulations from a AML CFT perspective? Employee training, what is a sequence, what timelines you're going to adopt, how you're going to refresh them, what are you going to do for the new staff? All those things becomes part of it. And then you are going to define how you're going to do a client risk assessment. So that's also becomes a critical part of it. And then knowing KYC, what is CDD, how you define what kind of a document should be there in the CDD, what are external reporting requirement or internal reporting requirements which you have, because this is again becoming a part of a regular requirement where compliance officer is supposed to report on periodic basis to the senior management or board what kind of alerts or what kind of a due diligence is being done, what are the practices or best practices he's adopting or she's adopting, and what the new things, if let's say something has gone wrong, it can go wrong, but what steps we have taken to prevent that it does not happen in the future. So all those becomes part of definitely a procedure manual which need to have. And we recommend that you should have some kind of a ready forms available. Let's say if a manual has been given to a staff, what kind of acknowledgement you're receiving from the staff, so that tomorrow you have a proof to show that, okay, you have read this document, you have seen this document, we have done a training. So everything what you do, it has to be an audit trail. So that's coming as a gist, because we cannot say that we have done training but not recorded. There is no email trail, there is no document which has been circulated. So that becomes a challenge. So I think what this policy procedure document should talk about is how you're going to do your day-to-day operations. It should not be a person specific. It should be a very structured and organization specific. And this is our recommendation, that at least these points should be covered. And to be honest, if you look at the questionnaire, you will automatically come to know these are the points which even regulators are expecting us to monitor and keep it at our end, so that whenever a regulator visit happen, or if doesn't happen also, we are compliant to the right side of the regulation. So that's the key which comes into the play. We have done a one separate video which you can see as I just put a screenshot here, where we said that UAE a new normal for the fast changing regulatory environment, identifying mitigation of risk. So I'll recommend you to see this video, because we have talked in detail on how the risk assessment can be done, and we have shown the risk assessment at a client level also. So the pointers which you can see on the screen now, which is question 46, 47, 48, 49, 50, and 51, all these are highlighting to how the risk assessment has to be done. So the question is very blunt and very straight away. Did your establishment carry out document an internal risk assessment to understand its money laundering and terrorist financing risk? So that's one is assessment. And then comes a separate part. Are we doing A, B, C, D? So these are all risk-based approaches which are there. Are you identifying the country risk? Are you looking at a customer risk? Are you looking at a product and service risk? Are you looking at a delivery channel risk? How the deliveries are being provided, how the product is being handed over, or how the final sales transactions are happening. So I recommend you to go through the video, which I am just highlighted as a screenshot for you. And this is very much available in the list of AML videos, which will give you a good detailed outlook of how the risk-based approach has to be done. We are not, for the benefit of all, we are not repeating that point. So that I think that's quite a quick one which can do that. On a quick perspective, as we talked about the 4 risk parameters. So this is what we normally recommend should be looked at. So customer risk, if you see the market, so which kind of a market we are behaving into, which is a target market, size and variety of customer base, customer model, IT system capabilities, how we're using, client relationship level risk, like overall background and reputation. We have a PEP in a profile. If there is a PEP, it's not that we can't do a business with a PEP, but definitely this requires a high level of due diligence which need to be done. Beneficial ownership, how we are identifying the beneficial ownership, UBOs, who are really people behind that. What are the source of funds which are coming up? I'll not say these are the standard one which has to be adopted by everyone, but yes, this can be indicators, and based on the business model and business type, the points can increase or can reduce. Both way it can work on. But again, it's a risk-based approach, and risk-based approach does not means that everything fits to everyone. So you need to look at organization level and then to work it on. And then comes a country and geographic risk, regulatory supervision framework. Again, on account of country corruption, how it is, international sanctions, if it is there on those countries, what kind of a mitigation points we need to look at. And again, a customer profile mismatch. Customer profile mismatch, we typically say, you know that client is doing $1 billion of business, but when you look at the client, when you meet the client, when you look at their lifestyle, it doesn't match somewhere, or vice versa. So both cases, it becomes a mismatch. We are not saying this is a completely a confirmed alert or a confirmed error. No, these are red flags. So how the red flags need to be brought up? Product and service transaction type. So what is the complexity? Transaction mode, whether it's a cash, credit, or check. So you have seen the pointers of the questions where it is very clearly said, if you do a 500,000 dirhams value or more of the transaction, you need to look at. It's not that you cannot do a transaction, but you need to do some more due diligence. You need to have those records, see some more things. If you're doing a cash transaction, it becomes an alert. If you're doing a transaction through the virtual currency, again, we have heard and looked at the point before where the points are being identified. So all those points becomes part of your risk-based approach. This is just a snapshot and a quick review of what we call it a risk-based approach. This need to be looked at when we are doing from a client perspective and should be documented in the policy framework also. Now, again, coming back to the senior management, what kind of a view senior management has? Does the board or senior management receive regular AML CFT reports? So remember, we talked about policy and procedure manual, and procedure manual defines what kind of a report a compliance officer is going to make and share with the board. So again, it's going back to the procedure, what we have defined, are we doing it or not? If you are not doing, either our procedure is not complete and we have to refresh it, or we have to ensure that the documents or the regular updates which are required are being handed over to the management in the timely manner. Senior management has to ensure the shortcomings are rectified. So if there is a gap, we have heard, like in some of the conversations, that still we have not initiated the customer screening checks at the organization level. If customer screening is not done, this is a shortcoming, and the management has to take care of this immediately. How they do it, what kind of a strategy they have to adopt, I'm going to pick up that as another questions also, which is very bluntly asked, and the answer has to be looked at before, and need to be worked on these things very effectively and very fast. Does the senior management review high-risk countries and customers? So in both cases it comes into. So if you have a customer or a client from a high-risk jurisdiction, or the final outcome of the client itself is a high risk based on the risk-based approach which you have done. So as we talked about the risk-based approach, when you see that video, you will find we have developed some kind of a tracker also, where you can give a scoring and final risk rating can be identified for the client. So if you are doing that and you identified there is a high-risk customer, then what kind of additional measures we are doing? Senior management has to personally review those accounts, and maybe in some cases we have recommended that the senior management should meet the customer or the client and ensure that additional checks and balances are being adopted. Again, coming to the compliance officer, which is a very critical role, and the authorities are looking at it very specifically. So again, has establishment appointed a compliance officer? That's the first question comes as, and again, coming back to other points, does the compliance officer has necessary power and independence to perform the duties? Now here we are talking about independence on account of reporting also, whom the compliance officer reports. Are they doing any conflicting roles? This becomes very important. So if, let's say, a sales activity is being done by the compliance officer, I think this is not at all right, and we need to revisit and see whether how this can be aligned for. So the compliance officer has to be an independent to the roles or duties he or she is performing. Does the compliance officer prepare regular and periodic AML CFT reports? As we talked about, again, this is coming from the procedure side. Does the compliance officer ensure compliance with AML CFT procedures of the establishment? So again, that definitely is a role of a compliance officer. Does the compliance officer review red flag? We talked about the red flag as part of the procedure manual. So as you look at this point, we are again going back to the procedure manual. So what is being defined as a red flag? Is a compliance officer reviewing it if there is a change required on account of change in business model or on account of anything new which is coming up? Are we incorporating, amending those red flags also? That also becomes part of the compliance officer and senior management joint responsibility. Again, there are various things which we talked about, CDD on risk-based approach. Again, as I said, we have developed and looking at some of the risk metrics, which is a scoring model, and that has to be adopted as a risk-based approach. We are looking at identifying the clients or are using a reliable and independent information for all cases. So now in this case, scrub or a data search is one of the elements which has to be looked at. Again, coming at whether we have identified the BOs of the customer, legal person and legal arrangement. Do we know who are the people behind the business or behind the activity we're talking about? That becomes a critical part from a CDD perspective. And in case of enhanced ongoing due diligence undertaken for high risk customers. So when we identify someone as a high risk based on the risk-based approach, what additional measures we are doing? Maybe if it's a high risk, you can have a procedure manual which says that every transaction with a high risk customer has to be approved by the senior management. This is one of the factors. I'm not saying this is the only factor, but definitely we need to look at what can be done which help to mitigate the risk or have a control at the senior management and the compliance officer level for the transactions which are conducted by the high risk customers. Again, coming at to on how the record keeping. So 5 years is a record keeping which has to be done. Now, remind ourselves that 5 years from the end of the customer and client relationship is not the transaction. So 5 years from end of the customer client relationship. So if the client relationship is continuing, documentation has to be kept endless. So that's a catch, or that's a point which need to be re-emphasized and reconsidered. Training. Again, as we are talking about, training is an important integral part, because if staff does not know the intricacies of AML CFT, they are not being advised, trained, or you can say given a direction, what is red flag, how the red flag has to be looked at, who are the right people to go and talk about, how to raise an internal SAR, what kind of checks and balances has to be done from a CDD perspective. All this becomes part of the training module, and the training has to be conducted not only for the existing staff, but whenever a new staff joins in, are you giving him the sales or the other role unless the training is being conducted? So that becomes also a part of your procedure manual, and which should be very clearly documented how you're going to do training. Generally, we say at least once in a year, and typically we say it should have at least a minimum 2 trainings to be conducted every year. Right now, maybe because we are still going at adoption stage, we are still learning a lot of process, it can be more faster also. So if something new comes up, you have to call for the staff, you have to call for the training, and this can depend on how the regulatory environment is changing. The changes are so fast happening, and I think the training becomes a very integral and important part for any organization on adoption of the policy procedure itself first, and then any changes which are getting adopted into. Last point, I think this is the most critical thing which we have heard from a regulatory perspective also. They're very serious and looking at there is no, I'll say zero tolerance we talked about on targeted financial sanctions or designated persons. So wherever there is the names which are there as a sanctioned individuals, we cannot do any business with them. And if it is done, it has to be reported at a very faster pace. Now, this is, and the senior management is directly held responsible for that. If you see the pointers which are being said as 1, 2, 3, 4 in question number 75, as part of explanation, is very serious and very straight away to the senior management. It says that targeted financial sanctions related policy procedure and instructions by board of senior management should be approved. They should allocate right financial, technical, or HR resources which are required to do that. So a lot of people keep talking about we don't have resources. Now this onus has come very straight away to the board to ensure if you do business, you have to ensure that you have right skill set and right tools to identify and scrub the data also. Because if you have the list of customers or the list of UBOs, how can you identify those cases on day-to-day basis? You need to adopt some system, or you need to get into a technology platform where you can search the data. And once you search the data, it does not stop. You need to have a capability to see if there is any changes happen. So as from a GoML side, I think we all are receiving some kind of alerts, typically on a fortnightly or weekly basis in some cases, where you identify the few organizations or few individuals being added in the sanctions list. If they are added in the sanction list, how you are ensuring that your current database does not have that name? It's very difficult to identify on an individual basis unless you have a handful of clients. Otherwise, what you have to do is you have to design a system, you have to adopt a system which can search any changes which are happening in the transaction, or in the field, in the people, or in the name of the UBO. So that has to be looked at. Periodic reporting of screening. So this is again coming as part of the discussion point if you look at it. And arranging internal audit or any kind of in the TFS area where any things are changing or any gaps which are there can be looked at, identified, and rectified at the earliest. So these are broad pointers, as I talked about, the three things which are predominant from my perspective, and I'm looking at from this document also. One is having the right procedure manual. Second, having the right training for the staff which you have and the team which is working with you. And the third foremost thing is the data scrub or the search of UBOs and the legal entities, that they don't have any kind of a negative, or they are not being sanctioned in any kind of a list which is being recommended to be scrubbed for. So this is the most important thing, I think, as we just maybe rephrase the 3 pointers. If you look at the 3 pointers are being completed, then balance thing becomes an administrative part, that you have to ensure that those policy procedures which are being adopted are being complied and followed day in, day out. Hope you like the pointers, and these are more a discussion point. I'm not talking about all the points, because if I'm talking about how many transactions are done by more than 55,000 dirhams, I think this is more an administrative thing, which an accounts or the finance person should be able to provide it. But other points which has to be looked at are these pointers. Time is very short. We need to look at completing those activity at a very fast and a paced way. So thought of creating a short video for the benefit of all. Hope you liked it. Other video links are there on our AML. If you want, you can refresh yourself. You can look at those. And I'm sure this is going to help to an extent. Thank you and wish you a great day. Bye-bye.